Well, the financial year has delivered Australia's fastest moving housing boom in over 20 years. But the writer, according to the latest work by CoreLogic, is that there is now clear signs that some of the crazy growth has begun to run out of a little steam. That's the exception of what's going on in Hobart and Sydney based on those monthly figures. Now, national home prices, according to CoreLogic, rose 15.6% over the year, while unit prices were about half that at 6.8%. Sydney prices were up 15% over that period, with Hobart just continuing to go and rollick along with 20%. Even Darwin, which has been a laggard in previous years, up 21%. Regional prices as well had a very, very good run as people looking to escape the cities in part to go and avoid being around other people with the virus in check, up 18% over the past year. For June, Australian property prices as a whole rose 1.9%. The numbers cap off a fast and unexpected year of turnaround in the housing market following the initial COVID-19 lockdowns. Well, as it runs out of steam, what are the recent lockdowns across the country doing to the property market? Well, let's find out from Anthony Landahl from Equilibria Finance, who's joining us via Skype. Anthony, welcome back to the program. It has been a very, very, very strong year against a lot of expectations, you've got to say as well, earlier on. We know that interest rates are a big factor behind that, but what happens now that we can't actually go out and do the things we do when it comes to the property market?
Yeah, that's a good question, and I think history gives us a little bit of a guide to start with. That last time we've had short-term lockdowns, the market has bounced. 12, 18 months ago, there were some forecasters talking about a 30% drop in prices, and that just hasn't happened, as those numbers you've just read out indicate. We've had an absolute surge in housing. So I think we might see a little bit of subdued action during this short-term lockdown. Sellers are probably readjusting auction plans, readjusting timing of bringing a property to market. And I think buyers, because they maybe can't visit a property, auctions are moving online, it might subdue some of their short-term behaviour. But I think as history's shown, the market has remained resilient and strong. So we might just have a little bit of a subdued effect for this short-term lockdown period.
Do you expect that supply will probably come off the boil a little bit because people can't go out and see those properties? So maybe wait till an example where we can go and actually see them in person?
Yeah, I think that's going to be some of the impact you've mentioned there. We got some people in the market at the moment, and the property suddenly it's not going to auction in a couple of weeks, or they're looking at putting properties on the market and they're adjusting the timing of that. So I think that will impact supply a little bit, and we already have a shortage of supply. So essentially that could actually help keep prices at the sort of levels they are. I think overall, more broadly, irrespective of this short-term lockdown, there's some other factors that are coming into play that are starting to slow the market down a little bit. When I say slow the market, I normally mean slow the rate of growth rather than starting to see a drop or negative impact. It's more just slowing the rate of growth.
Let's go down and investigate some of those factors. Now, I keep a pretty close eye on swap rates as being an ex-bank treasurer worker. They have started to go and creep up in line with what we're seeing with other risk-free rates. And there's that starting to go and flow through to the fixed rate market nowadays?
Yeah, it is. We're starting to see some movement in the fixed rates. There's a couple of reasons for that. There was some government money guaranteed at a certain floor rate until the end of this financial year. And secondly, the financial year just gone, I should say. And secondly, some of the banks are starting to think that the RBA's assertion that rates probably wouldn't move for 2 or 3 years, some of the banks are starting to think that'll come in a little bit. So the cost of funds is going to start rising, as you've indicated, and also the fixed rates moving, longer term rates, 3, 4, 5 years are starting to creep up. We saw NAB increase theirs yesterday. We saw CBA increase theirs 2 or 3 weeks ago. Westpac's still the only one of the majors with a 3-year fixed rate below 2%. That's starting to guide the market and starting to indicate people will think there'll be some movement. But there's a couple of other factors as well that are slowing things a little bit. Affordability is becoming an issue, particularly for first home buyers. Essentially, the rate of increase is outstripping their ability to save for a deposit or make the repayments.
Anthony, I was just going to ask you about that very quickly because we saw some of the other housing credit data that came out from the RBA yesterday. There's been a clear upswing when it comes to that investor market. Are we now seeing investors taking that place where first home buyers used to be last year?
Yeah, we are. The investor demand has gone up. We're even seeing that ourselves in terms of the demand for credit in the investor space. And we're seeing affordability issues with some of those first home buyers. Interestingly as well, we've started to see some of the non-interest rate, some of the areas that are regulated in the past creep in as well. CBA have increased their floor rate. What that means is it essentially makes credit harder to access for some home buyers. But you're right, David. Investors are coming back into the market. They've adjusted their horizon. They're essentially seeing that there's been a change in behaviour, a change in demand, and they're starting to come back into the market and capitalise on that.
Yeah, really interesting to see what happens. Of course, APRA and the RBA and the Council of Financial Service Regulators keeping a very close eye on that as well. Anthony, thanks for your views. We'll speak soon.
No problems at all. Thanks for having me.